Welcome to IGNOU's classroom. In this video, we'll be talking about fraud. And this is officially the last video in MMPC 5, that is Accounting for Managers series. With this video, we would have covered almost, I believe, all the topics that are important with regards to MMPC 5. But I don't want to wind up Accounting for Managers with this. In case you have any more doubts or if you want explanations on any topic related to accounting, you can let me know in the comment section below, and if I get enough requests, then definitely I will make a video on those topics. So by the end of this video, I hope that you have an overview of what fraud is, what fraud triangle is, which is a very important question when it comes to your term and examination, types of fraud, IT tools that are used for fraud detection, and methods of fraud detection. So let's get started. So what exactly is fraud? Fraud is where a person is financially cheated by another person. It occurs when an individual deceives another by inducing them to do something or not do something, which will result in a financial loss. The fraud can be committed either online, in person, or via correspondence. You might be very well aware of online frauds which are on the rise these days. People asking about OTPs, credit card informations, and all those things. Almost every week we get at least one message from our banks and other government sites that talking to us about the importance of not sharing any OTPs to any unknown people, right? So that is an example of fraud. Accounting fraud is an intentional alteration of financial statements, which could be done by an employee or accountant, which will lead to the falsifying of financial statements. Accounting fraud can overstate the revenue or misrepresent the assets and liabilities of the business. Coming to the fraud triangle, here we have the fraud triangle with us, wherein you can see the three spokes of the triangle. One is rationalization, next is opportunity, and the third is pressure. When these three factors come together, a person may commit fraud. It is not that even with all these three factors there, everybody commits fraud. No, that is fraud. Committing or not committing fraud is a pure ethical and moral choice of individuals. Even in the absence of, but the most thing is that when a person decides to commit a fraud, we generally find all these three factors there. But even in the presence of these three factors, a person can decide not to commit fraud, which is what we have to look forward to. So the fraud triangle is a framework which is commonly used in auditing to explain the reason behind an individual's decision to commit fraud. It outlines the three major components that contribute to increasing the risk of fraud. That is an opportunity to commit the fraud, an incentive or pressure, that is the need to do that fraud, and rationalization and attitude towards the fraud that is committed. Some people believe that fraud is actually required. That is their attitude. The origin of accounting frauds could either be internal or external. Frauds can be perpetrated by employees and owners, which are referred to as internal frauds, whereas frauds that are committed by outsiders, that is people who are not employees or owners, is referred to as external frauds. Few of the different types of frauds include consumer fraud, where targeting individuals through bogus telemarketing, email, Ponzi schemes, and all. Intellectual property theft, where where theft of intellectual property and trade secrets are done. Corruption, which includes bribery, extortion, intimidation, kickbacks, theft, and other forms. Financial statement fraud, where we overstate revenue, earnings, and assets along with understating our liabilities. That is what usually happens. Or it could even go the other way around in case we are trying to, file for a fraudulent paper suit and all. Insurance and banking fraud, which bogus health insurance claims, business insurance claims, and fraudulent bankruptcy. Asset misappropriation, that is skimming of cash and cash larceny and misuse of company assets. So this is not an exhaustive list, but just a a small list of the different types of frauds that are usually committed in the business scene. So the fraud tree, we said asset misappropriation as one of the types of frauds. So this asset misappropriation chart, which lists the most probable frauds that are done in case of asset misappropriation, is called as the fraud tree. And the reason being, why it is called as a fraud tree is that because of the numerous ways in which frauds can take place are represented by branches of a tree. Some of the frauds that are there include standalone frauds, which are committed only once, whereas some are perpetrated over a period of time. Frauds can be committed by an individual alone or in collusion with other individuals or entities as well. So, what is forensic computing? Nowadays, most of the financial transactions happen through electronic devices, and the authorization for these transactions are also more or less in an electronic form. You either get a call, right, a computer generated call, or a OTP, things like that. Forensic computing is the process of identifying, preserving, analyzing, and presenting digital evidence in a manner that is legally acceptable in the court of law. For this purpose, many IT tools and softwares are also used. Like we have a software called Helix, which is based on Knoppix, which is a variant of Linux, and it is used to acquire forensically sound images of hard drives and hard drive partitions of a system. ACL Desktop, also known as Audit Command Language, is a tool to read and analyze various types of files that are scattered across multiple databases on different platforms. Ultra Block is another forensic write blocker hardware which prevents modification in data assessed for forensic accounting. Password Kit is a forensic tool which is used to find all the password protected items on a computer system and gain access to these items using decryption and password recovery algorithms. Now, the methods of fraud detection could be supervised method, in which fraud detection is based on the dynamics of the previous frauds committed. This method makes use of prior data and information, which is also called as labeled information, which consists of both genuine and fraudulent transactions. And based on prior data, these models are constructed and trained to discriminate between the genuine and fraudulent transactions. The basic assumption of these models is that the pattern of past frauds will persist for the present and future also. Then we have unsupervised methods wherein it is based on the identification of outliers which are detected through data mining techniques. Change in behavior and frequency of transaction is detected by suspicion scoring systems which are based on the if-then type of outlier rules. When the pattern in data does not conform to the expected pattern or some anomalous data pattern is detected, an indication is it acts as an indication for further probe. The results generated by these unsupervised methods are not direct evidence of any fraud, but they merely tell us that the flagged transaction do not fit into the data pattern, which may be either due to error or due to some fraud. So that was an overview about frauds. I hope you liked our series on MMPC 5 as well as this video. Thank you so much for being with me till the end of this playlist, and I hope that you were able to learn something out of it and make your MBA journey a bit more easier. If you did, consider giving us a thumbs up and letting me know that you did find my video helpful. If you did not find it helpful, please let me know that also by using the dislike button. If you have any more doubts which are not yet cleared by any of the videos that are right now in MMPC 4 regarding accounting for managers, please let me know that in the comment section, and I will try my best to create a video, or through comments itself I'll try to clarify your doubts. Thank you so much, and I hope to see you in other topics also. I hope to see you in the classroom frequently. Thank you very much. Bye.